Hi, Warriors. How's everyone doing today? As Blake said on Skype, last full week of liquidity. Hi, Ren, Kevin. How's everyone doing today? Solar eclipse today. Forgot the time. Happy Hanukkah. Amira, hi, Irina. So, pretty good pop in the S&Ps. I think weaker dollar part of the reason that we're doing this, and we have a lift. S&Ps outperforming NASDAQ. Actually, I believe we're at the 2-week off number, which was above the market coming in this week. It's actually here at 36.91.70, right where we are here. So we'll see if we're going to make another move to new highs. NASDAQ, if you look at the two charts here, look how close we are to new highs in S&Ps. Much weaker picture. In NASDAQ, in fact, it's not near. Its 2-week off number comes in at 12,510. So we're still 60 handles underneath it, under the moving average, which would be my preferred short if I wanted to top pick indexes right here, because this candle was so much more decisive than this candle. See, okay. As I was saying earlier, the dollar is following. Did we make a new low? Yes, we made a new low by 4 points right here. I was curious to see if maybe we were going to tag this blue line. It's a pretty ugly day. We also have the Fed this week, interrupting our last full week of liquidity. So I was thinking that we'd have a chance around the big round number, around 90, to do it. Also looking for a short in the euro. We're almost at new highs here. New highs will not confirm. I'm thinking maybe 122, 22 and a half. 122 you're looking to do it at? Okay. So you could tell that if the euro rallies here, we're not going to confirm. Okay. Here we were confirming up at the highs. So that's something that was part of the plan from Saturday. We still haven't taken out this high, have we? Let's see. So the dollar index took out the low, 2177, 2170. So although the dollar index took out the low, euro still has not taken out the high. Maybe it's going to be a turnaround Tuesday. Maybe it's going to be the dollar's going to be fade into the Fed. Just a couple of ideas. And this was pretty weird because I actually talked about perhaps selling a stop hunt in gold over 1850, which is what happened, but it happened Sunday night. Yeah. And it opened $15 higher. I don't know if that was a spoof. But then I came back and then it was lower. So strange action in gold. I guess you could still call this 1820 level support. It's trying to bounce off it, and there is an eclipse. Maybe there'll be another rally. It looks much weaker than silver. See the silver? Gold has taken out some stops here, these last two lows. Silver hasn't. So I'm going to leave it alone and see what silver and the dollar does sometime this week. As I've been saying, December is seasonally one of the weakest months for the dollar, but we're about halfway through. We have the solstice due next week. Winter begins next week. Again, paid attention to those, and that's about it. So looking for sometime this week to fade euro. The pound's too crazy for me. And I want to congratulate the entries of Stell, who was patient, waited months for 92 to sell. And look at this. Nice trade, Stell. Always take a piece off. I know you're probably looking for much lower levels, but the entry was excellent. For a macro guy, it was pretty good micro timing. And I'm going to bring Blake in now, see what he's thinking here with Euro and S&Ps. I'm still sitting on my hands. I haven't done anything yet today. And but as I said, what I'm looking for are still above the market. The S&Ps are there, but I want to see if the Nasdaq has a chance to play any catch up with it over the next 24 hours. It looks vulnerable to me. So Blake, how are you this morning? What's
I'm
new, buddy?
awake. I can see you're so bored that you're passing it to me early.
I'm really not bored.
Just
Is
kidding.
it early?
There's not a whole lot going on unless you're short dollars.
Yeah.
I mean that's where the money's being made right now. And you pointed it out. The dollar is weak, and seasonality wise, this is the time of year where you want to be short dollars. So
Yeah.
I think that the dollar is a continued short. I am playing some counter trend dollar longs against certain currencies, but overall, I had some bids at the euro dollar at 121 trying to get filled last night, and it didn't fill me because just didn't reach for it, and I wanted to pick up the cable closer to 132.50. That didn't happen either, but I can't chase it here either, right?
Right.
So
Yeah, especially after this week, and the Fed kind of comes in where this week, even when we have 5 days of trading this week, when the Fed's in there, it kind of gives me pause to be aggressive or in the markets until after the Fed, and then we have two
right.
holidays. Yeah.
Yeah, I mean, between the Fed, you also have uh not like it's going to matter a whole lot, but you do have the Swiss National Bank, and you have the Bank of England. So
Yeah.
um
A lot of central
with
bank
a few
action.
central banks making decisions this week, it doesn't really make sense to be super aggressive bearish the dollar at this moment. You just have to pick your entries, and if you get filled, great, and if you don't, then you have to just kind of let it
Next.
go.
Yeah.
What's that? I'm sorry, Dale, you said something.
Next.
Yeah, and you have to say next. Yeah, that's right.
Yeah.
It's really important to just try to hold your ground, look for your levels, look for the prices to get long or get short, and wait for it. And if they reach it, great. And if they don't, then like Dale just said, next. You just move along. So what we're going to do today is we are going to go through all of the all the charts as we normally do, and then give hold on really quick. Yeah, grab the charts. Give Stelios and Steve some ample time to analyze the markets. Hey Dale, what did you think of having Amir on Friday?
Oh, it's good for our souls. Good for mine.
Inspiring, right?
Yeah.
It
Definitely good
really
for mine.
and what did you guys think? Those of you that are listening in, what did you think of Amir's interview? NG says Amir was amazing. I still think about it.
Yeah.
And NG said, asked when the 2021 outlook is coming out from you guys. Hopefully today, but it may take a couple of days. I've written my piece. I can always expand on it, but we're just kind of the team's putting it together, and then we got to cobble it all together, because it's not like one of us is writing it and then just putting it out. It is a team effort. So we'll get that out probably the early part of this week. Amira said Amir has a nice name. That's right. All right. So hopefully you guys really enjoyed Amir's interview on Friday, and if you didn't get a chance to listen to it, go back and listen to the recordings. I'm going to take a little bit of time this morning to, sorry, I was just looking at what that headline was, to go through the charts. And Dale, feel free to jump in if you see anything
Hey, buddy.
that I might have missed. But let's start off with the euro dollar. So the euro is right up against its highs. Now recall that this is the 78% retracement long term, 78% retracement. This is the, if you take the 2018 highs to the lows here in, this year post COVID move, we are at the 78% retracement. So that makes this 2170 level pretty big. I think we're going to eventually break it. I don't know if it's going to be today, but I think we're going to eventually break it. I was hoping we'd see a little bit of a drop towards this red trend line support, but then, the market just, closed the gap, and then just continue to move up. I have a feeling that this is what we're doing, if I had to guess. Is we're just, bullishly wedging. Now, what also could happen here is that we could, hit this support today or tomorrow, break down a little bit, and everybody goes, "Oh, look, it's bearish," and then, and then we get an eventual rally. I think one of these two situations are happening. Either we just break out, or we find some support intraday. So I'm going to write down support as being, well, first of all, it's going to be 121 and then 121.70. So let's just do that for now. 121.70, and we're going to keep it on bullish, obviously. So the cable, why is the pound up this morning? Well, it's higher because the UK said, well, I know there was a hard Brexit date, but really that doesn't matter. So we're going to, continue to negotiate even beyond December 31st if we need to. So as long as the two sides continue to talk, there's a chance that a deal is done. And so the cable like that. And I'm going to tell you one thing. I'm just going to say this really quick without going too deeply into some of these cross rates. I know that the cable, I really want to be a buyer. And if you saw the week ahead video, I was really hoping that we get a dip down to 130. I was hoping this week we would have, over the weekend, we would have gotten there's no way this deal is going to work. And then the pound would have sold off. And then I and you and we all could have been buying around the 130 level. Obviously that didn't happen. So it gapped up over the weekend, and here we are. But I'll tell you, if a deal gets done, I think the cable will go higher, but I want to show you something. This is the pound New Zealand. Okay. And here's a daily chart. So look at this multi-year trend line. You see that? You see how we broke down here. You can see this 161% extension. What's that, Dale?
Yeah, I see it. Yeah.
Yeah. So see how we hit the 161% extension. So we broke down. I'm telling you, if a deal gets done,
yeah,
I'm going to get long that. I'm going to get long because like I said, I think everybody's expecting the pound to move to 140, 138, 140, something like that. But where I think it could really squeeze is against some of these commodity currencies that has had hell of a run. Especially you take a false breakdown like this. I like to be long. Now, I'm not long now. I'm not. And I'm not buying it right now. I'm talking if there is a Brexit deal, that's what I'm going to do. I think, will I buy the cable as well? Maybe, but I think that's one of the things that I'd like to do is whenever you get a breakdown or a breakout and it becomes false, it becomes pretty powerful. So that's just something that I am thinking personally. All right. So I'm going to take you back off the crosses. Let's go into the cable. So As we're below this 135 level, you do have to be careful. I still think that we're range bound. I was hoping, like I told you guys just a moment ago, I was really hoping for a dip down to 130. Doesn't look like we're going to get it. We're still dealing with this 132, 133 to 135 range. So today, if we get any rally back up towards 135, we probably need to, I mean, I'll write 135 just in case the dollar sells off. Okay. I will say that 132.50 is support. Why do I say that? Because that's this high right here, right there. So that means we would fill the gap. We would come off and fill the gap, and we could still get there. We could still hold on really fast, really quick, guys. Just give me a second. We could get there.
What a disorderly chart.
It is. Yeah, I mean, all you need is one headline where you get the UK negotiators go home early, and that could because they somebody had the poops and had to leave the
negotiations.
I know you guys just laughed on that when I said that, but you said poop. No, I mean, you could get some headline like that, like some silly headline, like, negotiators go leave early, and it's, because they didn't feel well, and then the pound spikes down to 132.50, and you go, and then you get clarification. You're like, oh no, that's not really a big deal, and then it hits 132.50 and then bounces back to 133 and change. So I write down these support levels because you never know why we might get down there, and how we can get down there on, especially dealing with Brexit. It could be some silly headline. So and last week was really, like I pointed out on the week ahead video, if you watch the video of Boris Johnson, he said, on the 31st, you could expect an Australia style Brexit. And he also said, or we could expect a Canadian style Brexit. But the headlines didn't say that. The headlines just said, oh, Australian style Brexit. It's going to be a hard Brexit. It's going to be a hard, they're getting out of here. They're no deal. And that wasn't what he said at all. And that's why these headlines can be very deceiving and very biased too. So be careful, because if they're not reporting the whole gist of it, it could catch you. So anyway, I don't need to go on to
the media twisting news. No, never happened.
Yeah, it does happen. I'm telling you, Stelios, you should don't believe the hype.
It's like saying UK data gets leaked. I don't believe it.
Right. Exactly. And good morning, by the way. So let's here's the Aussie. Aussie's at new trend highs. Now, I want you guys to remember this. $76.30 is the 38% retracement of the
whole decline,
whole move lower. Yeah. So if for some reason we make it to 76.30, you guys are long, you should probably get out. And I don't say that all the time, like, but that is going to be a massive level of resistance. That's the kind of level that, because it's so massive, that if we get there today, or whatever, I might actually short some dollars. I don't think I'd short the Aussie dollar. I would short, like, I'd buy the Euro Aussie or something like that. I would seriously consider it. So
this is the first time in a while, Blake, that new highs on lower time frames are not confirming this new high.
So yeah, we're not, the divergence, right?
Yeah, we're not confirming here.
So let's hope you know what I should do. I should put an alarm like right here. Let's hope the Aussie spikes up there. Could.
Yeah.
It really could today. So you never know. Okay. So
If the
let's
Dixie's
go.
going to 90, yeah, the Aussie should easily get there.
Yeah, for sure. 75.20 is going to be support. Kiwi. Kiwi's nudging up against the highs. The 50% retracement. The Kiwi's underperforming the Aussie, but the longer term 50% retracement comes in at 71.47, so 71.50 basically. Just in case we decide we want to go a little higher here. Still bullish. And support is 70 cents. Whoops. And that's key. Right. Well, we're above 70 cents, actually 70 cents is right here. We should probably write this down for the day because 70.75. Okay. Sorry, I had an itch in my eye. Okay. Continuing on. Dollar Canadian. So the dollar Canadian, let's not forget where we're at. We're really key 161% extension. If you want to play the dollar counter trend, I mean, the dollar Canadian's probably a good choice just because it is right here. Okay. It's right at the 161% extension. So we've been down to 127.07. I still think that 127 is pretty key support if we should probe it. It is still bearish. Okay. And while we're below, and look at this failure here, while we're below 128, you've got to imagine that the bears are in control. Okay. I do think that this is pretty important support down here. Dollar Swiss. There's the dollar Swiss, and it tried to come out of a descending wedge, but now we might end up trying to do a double bottom maybe. The 161% extension of this move right here, this big bounce right here, comes in at 88.05. I'm going to write that down after 88.50. So 88.05, 88.50. It is bearish. And resistance right now is 89.15. It's that little high right there. Right there. Okay. Okay. And oops. Wrong spot. Dollar yen. Okay, so the dollar yen, same as yesterday or same as every day. But look at us right here. Actually, we are probing pretty important support. 103.65, we're at it. Do you buy the dollar yen here? I don't think so. But, we are at pretty important support. I'll write down 103.20 after that. As I explain to you guys every day, I really don't know what to do with the dollar yen. So you guys can have fun trading it. It's not my cup of tea right now. Resistance intraday 104.15, then 104. Then 104.75, which is way up here. And the dollar yen is one of those pairs that could spike up for no reason whatsoever. It can, and it does. The Bank of Japan is very active in the FX market. So, the BOJ could put on the floodgates of selling yen, and then next thing you know, dollar yen spikes up 50 pips, and you go, wow, how did that happen? Dollar index while we're below, well, you guys know, as long as we're below 91.80, we continue to stay bearish, but this pennant is making its way lower, and the pennant could look like that, could look like that, could look like that. It's just bearish, right? So while we're below 91, that's its resistance today. Support right now, the 161% extension of this move comes in at 89.88. So I'd venture to say that 90 will offer support. 89, 88, and then 90. And this is bearish. Dollar Mexican peso. So the dollar mex, remember, we came out of a descending wedge. Okay. We are still consolidating. And what's interesting about the dollar Mexican peso is we've been in this pretty tight consolidation after breaking higher. We could dip all the way down to 1995. But I think resistance now, intraday is at 2011. So I'm getting kind of granular here. So 1995, 2011, 2020, which will be really big resistance. And I'm going to keep it in range because I'm not going to put it in bullish because it really needs to get above 2020 to be bullish. You know, actually, I think we're all going to be bullish when we're past 2020. Get it? Did you get it?
Nice one. Nice one.
Thanks. Thanks. Yeah. Don't worry, folks. I'll be here all day. That's great. Yeah. All right.
Be sure to tip the waitresses. Yeah.
Okay. Christmas time. All right. So the US dollar, Norwegian krona, we are nearing support. This is, remember, this is the double top extension, comes in at 863. We've known that forever. There's a 261% extension of this move that would take us all the way down here. We still can't get over 890. Even if we get above 890, 895 is big resistance, but we're not getting there anytime today. We might get back to 890. If we break 868, 863, 868, which right now is more likely one. I'm going to put a star next to 863 because that's when we complete the double top, and 890, and we're bearish. Okay. Next up, gold. Well, we'll do the S&P. So here's the S&P, still bullish. And if you missed the week ahead video, then you know you don't know that I'm just, while we're above 3,600, we're in melt up territory. We're above the big megaphone pattern, and realistically, it looks like we're going to rally past like 4,000, and that's one of those really illiquid type of moves where you get past this week. FOMC confirms they're going to stay loosey goosey, and then you get into Thursday, Friday, people start buying stocks, and then you get into illiquid territory next week. Futures just continue to grind higher. Then you get, after Christmas, between Christmas and January, and then you get the Santa Claus rally. And next thing you know, we're trading above 4,000. And then, you get into the first couple of weeks of January, and we're spiking up towards I'm just, trying to just measure this all out for you. You get past the first couple of weeks and we're trading at 4,000, then 4,100. Next thing you know, we're in blow off top territory. And then the inauguration comes by and we get a new president in the United States. And all of a sudden people go, oh, whoa, what are we doing way up here? Right. And then Donald Trump will jump on Twitter and say, I told you, as soon as I'm not president anymore, the stock market comes down. But he might end up being right there. So anyway, I'm trying to just kind of illustrate what could happen over the course of the next couple of weeks. Look, while we're above 3,600, there's zero reason to be bearish. I mean, you guys can try to fade the market if you want, just keep tight stops. 3,600. It's bullish. I mean, we could be in a situation where the Aussie dollar sees 80 cents before, a new president in the United States is in. That's could potentially happen. I know you guys are probably like, oh, no way. I'm like, it could happen. You can't dismiss the potential there. Resistance for the S&P right now, 37.15, because that's the recent highs. Gold. We have this head and shoulder pattern. We're probing support here. So a break below 1820. That would measure a move to back down here to 1770. So
Nice move.
yeah, I mean, while we're range bound, it's possible. Resistance 1850.
It's funny on your platform, you don't show a spike above 1850 like it did on TradingView. On mine.
Well, I'm looking at Oanda's feed. So you might be looking at maybe FXCM's feed.
Yeah, like open $15 higher last night on whatever one I'm watching, and cleaned out the 1850 stops. Anyway, so I guess it matters.
Was that overnight?
Yeah, Sunday night.
Oh no! You know what? Here, I'll show you. I don't. Oh, you're using
There you
IDC.
go. See that?
Yeah, that I don't think that's real.
That didn't happen.
This is Bloomberg. This is you can see XAU right here.
Yeah, it didn't do that.
It didn't. No, not according to Bloomberg. And I don't think that maybe
spoofing.
Maybe a futures contract that did, and
yeah,
I don't.
Some spoofing deal or something.
Yeah, I didn't see that. But anyway, so there is your bias chart. It is finished, and I think everything's right. Yeah, everything seems to be right.
All right, Stell, get under your under the cover of your old camera on the tripod and take a picture.
I've done it and posted it already.
Like very old photographers used to do, and flash, there it is.
So good morning, Stelios. Steve, if you're here, good morning. How are you guys doing?
Morning.
Good morning.
Steve.
All good, all good. It's very rainy here.
It's what?
Very rainy.
Very rainy. We actually had one day of rain. That was like the first day of rain we had in like 6 months. And it was like torrential downpour. Yeah, I mean, like it was when we get it, it just the ground gets so hard that when it rains, it's so dry that it doesn't seep into the ground. So we flood everywhere. It's crazy. Anyway, enough about the weather. What's the weather of the currency market right now? What do you guys, how are you guys feeling about the dollar? It looks weak. What do you think about Brexit over the weekend?
Steve's still very bullish the dollar.
Yes,
like he has been. Yeah,
I can't stop being bullish the dollar every single day.
So
dollar cost average.
Well, how do you guys feel about the news that Boris Johnson and EU are going to continue to work and kick the can down the road as long as they possibly can.
Well, when I read the headline, the first 5 minutes I wanted to kill myself, but then I thought about it, and
And you
know,
decided not to kill yourself.
it was kind of expected.
The permanent solution for a temporary problem.
It was always a possibility. I have to point out, I did short some EG above 92 or at 92.
You did.
I
on
did
Friday.
close it. I closed it on Friday before. If it was
you
any,
did?
well, anyway, I've closed it for 50 pips. It's still okay. But if it was any other weekend and not this one, which was basically do or die, I would have left it. But this one was just too much event risk, and I thought, you know what, we're gonna get more opportunities to get into this. Maybe at those levels, maybe at worse or better levels. But anyway, it's I just
Great
didn't want to
attitude.
risk it. So I closed it before the close. I mean, people on the chat room will have known this. I posted it there. And I'm going to continue monitoring. And what do I think about the whole situation? I think I'd be ashamed of myself if I was one of these guys, Johnson and von der Leyen and all that. I mean, come on, get your act together, do something. But
It's happening everywhere still. They
it
can't
is.
get any COVID relief to people that don't even have unemployment insurance here in the US with a pandemic going on.
Well, yeah.
That's our Congress.
And Germany's going, like our friend NG is saying, Germany are going to hard lockdown. And, this thing eventually, I mean, the effect on the global economy is still here. It's going to continue. Okay, we're not going to, things are not going to get destroyed completely. But come on, nobody can seriously think that things are going to be better within 6 months from now. I find it very difficult.
I tell you, I got very aggravated, guys, when I saw Bill Gates' interview, because you have to consider him, whatever your opinion is of him, even including, conspiracy theories. He did say that life will not really return to normal through 2022. And I wanted to, pull my hair out when I heard that, because, I'm getting my hopes up that later in the year, it's going to be, there'll be more normalcy. Maybe we never get back to where we are, but him saying that things are going to be, I'm going to use the word fucked up through 2022. Man, that bummed me out.
Gosh.
You guys ever hear that before?
Really, can you bleep that out? Somebody bleep that out.
Yeah, edit. Bellu has to edit that out. Anyway,
but Dale, let's think about this really quick. And as much as screwed up as it is, I actually agree with him. You're no spring chicken, right? You're just not.
Yes, I'm an old rooster.
Yeah, and you know what? I'm not necessarily a spring chicken either. I was talking to my neighbor across the street actually last night. He's a ER doctor in Minneapolis. He flies back and forth to Minneapolis. Works there for 4 days, comes back, stays here for like a week, and that type of thing. I was asking him, I'm like, hey, what's your feeling about the vaccine? And we were talking last night outside, and he's just like, and he's very much in the attitude. He's like, look, as long as you're younger and you have good blood flow, he's like, you're gonna get through it. You could get sick. You might be sick for 2 weeks. You might be sick for 3 weeks. Some people are sick even longer. You might be sick for a couple of days, but you'll get through it. He's like, but if you're older, the risks are increased. And so as you get into next year and, the vaccine starts to make its way around, whether we get partial herd immunity, you got a lot of people being vaccinated, you're still at risk. And, by the time you get your vaccinations, Dale, it might be April or summer of next year. And then you get your vaccination and you're still not completely immune. You might still want to wear a mask, because there might be somebody that could give it to you and there's still a smaller possibility you can still get it. So, do I think that it's going to be like no mask and back to life as we knew it pre 2020? I actually think he's right. It's probably going to be 2022, but I think
through the end,
we will continue to find a new normal, and it'll be more normalized as we move through next year. I believe that.
Well, thank you, Blake. I put my razor blades away.
Good. I'm hoping so. And then, I was talking to Steve and Stelios, or I was talking to Steve, actually, Steve, when we were talking like Thursday or Friday last week.
Yeah,
mean,
Friday
look,
probably it was. Yeah.
if you're in the United States, life is pretty normal around here. I mean, when I say normal, it's we can't eat indoors at a lot of restaurants, but maybe it's where I live, especially where I live. I mean, people are out and about everywhere. They wear masks, but they go about living life pretty normally. But if you're in Europe and you're in Greece, what's it like over there, guys?
Pretty much everything, with few exceptions, is closed. I mean, supermarkets are open, grocery stores are open.
Like last March.
Yeah, a couple more things are open, but other than that, everything is closed. Schools are closed.
It's very
Shops
Dale.
are
It'd be very
closed.
similar to what we went through for those 2 weeks, and you can see why people are a little worried about Europe because you guys are in like serious lockdown situations.
Well, we might be too after the inauguration.
Yeah, we could be. We could.
Yeah, anyway, if there is
could
one.
be.
So anyway, that's Bill
you're,
Gates.
You're still quite pessimistic about that, huh, Dale? About the smooth transition of power.
Look at the numbers. It's not pessimistic. It's look at the numbers. I mean, 250,000 cases a day. So
no. I mean about a smooth transition in power, because you said if there is one.
Yeah.
About the inauguration.
Anything can happen.
Okay.
Ziggy says, "Can I be the one who gives Dale his shot in the gluteus maximus?" Though I don't know. I don't know if I want to see it.
I'm way too shy for that.
Hey guys, I'm gonna let you take over here. But before I do so, let me mention this, and I'm gonna let you guys banter on. I'd mentioned this on the week ahead video, and I'm gonna say it to you guys right now. If you are going to take a trial of Forex analytics, this is the perfect time to do it because it's $1. It's $1. You can try it out. And then, if you don't want to go that route, you can open a Pepperstone account and get Forex analytics for free for a few months. But this is the time to actually try it out, because we will have our end of year or new year 2021. And hell, we might actually even bring the best discount. We might even beat our discount that we've never done before ever, because 2020 was so screwed up. But if you really want to take advantage of that offer, then it's a good idea to actually try it out ahead of time, because once we initiate an offer, you can't try it out. You have to take it. You have to uptake whatever the offer is. So if you really want to try it out for $1, do it now. Do it over the next couple of weeks. Okay. All right. So I just wanted to say that and get it out of the way. So guys, have a great one. Enjoy your Monday and trade safely. And Steve, Stelios, Dale.
Hey, buddy.
It's all yours.
Thank you, Blake. Good luck today, buddy.
Bye-bye, mate.
Right. So the UK is kind of monopolizing news again. And as some people expected, the can has been kicked a little bit further, and maybe there's going to be some kind of solution. I mean, it's very difficult to understand from all the comments coming left and right and sources and this and that, what exactly they need. But I think the main sticking point, and the only sticking point at the moment, is still fishing. That's probably the one. And really, if you want to make things work, fishing, really? I mean, okay, it's about sovereignty and blah, 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 but come on. I think they're almost there now. And we have to endure a few more days or weeks of this crap. And afterwards, we can all go on with our lives again. So anyway, my view on the pound is still that there will be something done. And I'm going to wait for spikes to sell in EG. Cable, not so much. I don't want to go into cable. I think sterling Kiwi is a great one, like Blake said. And I have traded this in the past. I haven't traded it in over a year now, almost. And this can move massively. So I like that one to get long.
Sterling Kiwi.
Yeah.
Sterling Kiwi,
like 100 pips is like, doesn't break a sweat to do.
Yeah, the problem with sterling Kiwi, as we've showed before, technically speaking, is that
it's broken. Yes, Blake showed
it has broken down from this massive
Imagine
ascending
what
channel.
happens. Imagine what happens when that becomes a false breakdown.
Yeah, if
Come
that
back
proves
up.
to be a false break, it's going to be, it's going to be likely a big move to the opposite side. Although we still have some room until we can claim that that happened, right?
Yeah.
We did find support at the 61.8 of this whole move higher, so that might mean something. But from a technical perspective, as long as we trade below, like, what is it, like 190, 150, I don't think it's a wise thing to try to fade this move.
Well, I'm not doing it now. Obviously, I'm saying if we get a good outcome, I don't mind missing the first 200-300 pips because this thing is going to go to 2. So
200-300 pips, this thing can move in a day
in a day.
easily.
Yeah, exactly.
Easily.
So anyway, that's my view on sterling. Blake mentioned we have this week the Fed, the Bank of England, Bank of Japan, the SNB, Norges Bank, and Bank of Mexico. And although very little is expected in terms of movement, I think, is it Bank of Mexico who are expected to move? I can't remember, but
Banxico.
Banxico, but it's you always get some details, something in the statement, some kind of forward guidance somewhere. So it's, although nothing's expected, it's definitely worth, especially with the Fed, definitely worth watching. Our friend Georgi is asking if I still believe we've seen the bottom of silver. I don't know who is asking. I don't think we've seen it. I think you disagree with me, Steve. I think
no, I don't disagree in the sense that the jury is still out, as they say. From a technical perspective, right?
Yeah.
Because we haven't broken through this big channel to the upside yet. But I do think there is a decent possibility that we've seen.
Yes,
low.
absolutely. Of course, there is a possibility. And Georgi, I'm guessing you're from Bulgaria, so you're a neighbor. So I will pronounce your name right. So yeah, my view is I'm still waiting to see possibly 21s. If we do, that's going to be a gift, and then we go higher. Thing.
I'm with you. Let's hope we can see lower prices in silver. I mean, I wouldn't even mind 19.
Yeah. Well, I'll be adding in 19. Patience is a virtue, my friend.
Indeed.
Okay, so what else? Today is the Electoral College, I think. So basically, we're going to start
December
getting,
14th. That's
so
correct.
we're going to start getting, to count actual votes and see what happens. So
I don't think we can expect any real surprise from that side, and I don't think even the Trump administrator expects any. I think Stelio, their hopes lie on whatever happens in courts. Stuff. You know what I mean? Yeah.
Or the streets. We're starting to have some violence. People stabbing each other in Washington, D.C. The group steal the election, and of course, Biden supporters. So that could be something that after today even accelerates. Let's face it, guys. There's 70 million people that about that really believe it. Sincerely believe it was a stolen election. They really believe it. So,
well, unfortunately it seems like in many or maybe all major countries there seems to be a reason for people to get down on the streets and break stuff.
Yeah, there are reasons, but they're not the obvious reasons. These are just excuses. You know what I mean?
Yeah, true. Anyway, so that's today, and also it seems that
I'm Downer Dale today.
You're what? Sorry?
Downer Dale.
Downer Dale.
Remember that character on Saturday Night Live, Debbie Downer? Everything was bad. Anyway.
Okay. The stimulus plan is going to be, I think, voted today or announced today in the US. That's been expected. Nothing really else of note. We had some data out of Japan better than expected, but really, who cares about this kind of data?
Indeed. One thing is for sure: the yen has completely stopped caring about
Yep.
any of the data. Although
Or
this
risk,
is
right? It's not correlated with risk anymore, which is really strange.
Yes, because Stelio, yields are not correlated to risk anymore. That's why.
Yeah, true.
It
It's
used to
amazing.
be, a very straightforward inverse correlation, and that's gone out of the window. So, that immediately severed the yen's ties with risk as well. At least, looking at it from the perspective of USD yen.
Yeah.
Now, I'm not doubting that if we have something like major risk off, the yen should pick up, right? Should benefit. But other like big events, I think this correlation is gone until the bond market becomes a market again, which God knows when that's going to be again. I mean, are we going to be alive? No, I'm kidding. Of course we're going to be alive, because I don't think this charade can keep going for decades. But
Speaking about that, interesting you should say it. I saw a chart today where the commodities index is about to break out of a 10-year, above a 10-year trend line or something like that. So if this happens, then you're gonna see some inflation somewhere, when commodities start going. So
I think commodities will explode higher during the next few years. They're not going to move higher. They're going to explode higher.
Yeah. So I think higher yields are coming. The question is when, because central banks are buying everything. So
they're going to resist doing it for some time, claiming that that's exactly what they want. That's why they've already built the ground by saying, that they need to make up for previous years of lower inflation, and they want the average without even specifying how many years average they want to see. Let's say at 2+ percent. They haven't even specified, so they can claim a longer period if need be. But I do think that that's just going to save them some time in reacting, because at some point it's going to be more than obvious that they either do something or the wheels go completely off the bus.
Yeah, I pardon my dogs. They heard the cat or something. I am still short the Bund, by the way. I'm down like 0.3% or something like that, 0.4. This is nothing. I'm going to keep it because I do think that eventually yields are going higher. I think it's a very, very good risk reward, but needs loads of patience. And that's it. I don't have much.
Technically speaking, the Bund still looks very, very, very bullish. I mean, we've gone through a prolonged period of consolidation. My gut tells me that we're going to see a higher high. So we're going to see an extension higher, I believe, Stelio.
I'll short some more then.
Before we actually can get, finally some type of a logical move lower.
Yeah.
Treasuries not as well bid as the Bund, but the fact alone that despite the dollar's demise and changing expectations of inflation, they just hold up quite nicely in this range near the highs. But of course, this is not a legitimate bid and offer market. I mean, the Fed has bought like probably if not 100%, almost 100% of all issuance during the past year, and I don't see any evidence why that should change the year ahead.
Indeed. Oh, cats, dogs, everything. Good.
Yeah.
There you see. Yeah. It's here time.
Well, it's a good segue talking about commodities, because the goddess of grain, Angie Setzer, is going to be with us today. And if you look at any of the grain charts, they've all broken out of major bases in the last month or so.
Yeah, why wouldn't they? And here's the dollar, by the way, the dollar index breaking through this little triangle. I've tried to keep warning people, every time we have a little bit of a rebound or a consolidation, don't eat the bait. Yeah, don't eat the bait thinking, that a little bit of an, of a reaction higher means that this is a trend change. I mean, this trend is not easy to change, trust me. So, dollar slicing for the time being through this triangle, that opens the next downside objective, which is below 90. It's actually at 89, 89. Below that, we go closer to 89. Then we have like 88.25. so on and so forth. At some point, as we've said before, yes, there's going to be a reaction higher. There's going to be some punishment to people that are jumping on board this trend train, late. But is it happening as we speak? No, it isn't happening as we speak. And I have no intention of trying to find what that date is going to be. In other news, just look at the S&P. The previous move that we had lower so far looks something like a pennant to me. So I wouldn't be surprised if we see within this week higher highs. I mean, from a technical perspective, it still looks quite healthy. Yes, momentum has definitely slowed somewhat. And yes, I wouldn't be buying up here. But as I said the previous week, even when we had that negative day, would I actually be shorting? No, I wouldn't be shorting. From a risk reward perspective, after that one day lower, it made sense to short if you really wanted to be in the short side. But I have no intention to be in the short side of the stock indices. I have no intention to be in the short side of the metals, no matter what. And I have no intention of being in the long side of the dollar, no matter what.
How do you reconcile gold weakness with dollar weakness occurring at the same time?
It's not about the dollar, Dale. It's about
you can't say completely that
it's
the
I mean it's
pricing
not
of gold
directly. It has to do with real yields, and don't forget that it has to do with other market dynamics. For example, let's be honest. I mean, gold had a massive rally, right?
Right.
I mean, think about it. 2.5 years ago, we were trading at 1150, right? And the vast majority of the market was bearish, thinking this is not a bottoming pattern, but a corrective pattern that points much lower. Your friend, quote unquote friend,
yeah, but
Henrik Zemberg, for example, was not an exception back then.
Dollar weakened during that period too.
Yes,
Okay,
but it's all about real rates and expectations about them, as I said before, right? And then we had, in 2.5 years, we had this massive rally from 1150 to almost 2100, right? Now, after such a move, getting, a correction that lasts somewhat is well deserved, right? So, but
I'm just talking about recent action. I'm just saying that people that have been buying gold because of dollar weakness have been punished.
Hopefully,
so far.
Hopefully, people that have been buying gold understand what it means to be buying gold. And buying gold, I think you've said it best. You don't wait to buy gold, you buy gold and wait. Because that's exactly the fundamental backdrop at the moment. You buy gold and wait. Because 99%, in my opinion, you're going to be vindicated, because the financial, monetary, fiscal conditions are unbelievable. They are amazing. I mean, in all honesty, there is nothing certain in trading, but there are a few things I feel so certain about in life, then that gold is going to move higher, right? Gold and silver will continue moving higher. Now, did we see the low here at like 1762? For that, I can't be sure. I can be sure that we're moving higher over time, but can I guarantee to myself? Of course, I can't guarantee anything to anybody else, but can I guarantee to myself that there's not going to be like a move like this happening? No. I mean, yeah, it absolutely can happen, right? But I do know that gold is moving higher, because I see no way how it can move lower, because, as I said, there is no better fundamental backdrop than the one we currently have. I think that the dollar's devaluation is going to be ongoing. I think that inflation is actually going to pick up, because now they will actually have to inject inflation from the bottom up instead of only from the top down, which we know that that type of inflation stayed mostly in financial assets and didn't spill over so much in the measured inflation, which is anyhow tinkered with. So I do think that this time we're also going to see inflation indices picking up, and real yields will keep moving lower. So I expect gold and silver to do extremely well as everything else that's tangible, as commodities, right? Stelios mentioned that commodity index is about to break higher. Copper is, unstoppable. Nickel is
So let me
unstoppable.
get this straight. You're constructive gold.
Yeah.
Huh?
Look at
Am I
natural gas,
reading?
by the way.
Am I reading you correctly?
Yeah, look at natural gas, by the way. You remember
Yeah.
we've been talking about this. I
Yeah.
like the reaction so far. If you remember, I thought that even if we move down towards 220, 223, that's
Yeah.
still going to be no big deal for, from a technical perspective. And now I'm monitoring this channel once again because we're getting closer to the resistance. I do think that eventually, probably here in natural gas as well, we're going to break through this channel, and then we're going to extend higher, probably squeeze higher. Somebody else was asking about crude oil. Crude oil just, keeps on pushing higher. I mean, not in a very impressive way having to do with momentum, but still it keeps on, appreciating. So, okay, I got the memo, Dale. I got the memo. Yes.
I'm just
It's
hammering
in
my
easy
E
time.
string, man.
Yeah.
All right. Well, I
So
stick
more
around
time,
for
yeah,
Angie.
more time tomorrow for that. But I think it's a good segue, since we were talking about all that, to
Yeah.
also see what's happening in the grains, right?
Yeah, definitely. And Angie knows them, excuse the pun, from the ground up, because she is in
No
the
pun intended.
yeah,
Yeah.
she is from the agricultural industry. So thank you,
Yeah,
Steve.
I'm definitely, not an expert in that, but as anything that has intrinsic value, I think they're going higher.
Yeah. Yeah, and there's other components besides a weak dollar. There's weather. There's everything. So, welcome back to Face, Angie.
Thanks for having me.
Oh, what a great time to have you since our last conversation. If you want to share your screen,
No, you
we,
can
you know,
feel
we had
free
those,
to.
yeah, we had those long-term bases developing in the grain complex, and
Mhm.
we had breakouts and, $11 beans and wheat and corn rallying with beans to different degrees.
Yeah.
Let me ask you this question.
Dale, do
Yeah.
you at least want to share the screen so it's not empty?
Yeah. Feel
Oh,
free to just throw up some charts. I don't have anything to
oh,
share. I never
oh,
come prepared with charts, so I'll let you
okay.
guys. Yeah,
All right. Yeah, sure.
I'm just a dirty old fundamental trader that can watch support and resistance. So I'll
Okay.
let you guys throw the screen on. But
Okay. So let's talk about these grains. And, here's the picture in beans
yeah,
daily. Look at that. So it looked like we broke out over about 920. Tremendous advance there. Corn,
yeah.
not bad either. And wheat has been, bringing up the rear. So tell me about the durability of a bull market in grains, Angie.
Yeah, that's the $1 million question. Right. Are we working our way towards a next leg higher, or are we not? And obviously, when I was on here a couple months ago, I was not in the camp that we were. Now, the hardest part with grains, obviously, is that weather is so hard to really forecast, and your guess is as good as mine, much beyond 5 days out. And so we really were strong because of the epic export pace that we had seen. Really kind of a surprising export pace. China came out of nowhere and just started buying everything they possibly could.
The
Um,
Chinese?
yes,
Yeah,
the
okay.
Chinese. And I
Mhm.
still feel like there has to be a story behind it. And maybe that story is the simple reason, right? The simplest reason is usually the one that it is. And maybe they had depleted their stockpiles waiting out the last 2 years and had run into a production issue on their grains at home, which they still won't admit. Last week, they came out with a crop estimate, the Chinese did, and said that it was the same as a year ago, although their demand structure definitely is not the same as what it was a year ago. So you really saw that Chinese surprise with them coming in and buying a large amount of both, corn, wheat, soybeans, especially soybeans.
What do
And
they
then
produce? Are they bean producers in China? Angie?
They have enough beans to say that they produce beans, but not enough to really put them on
Feed
the
the
map when it
population.
comes. Yeah, it's a small amount. The hardest part with China is there's a bit of a mistrust when it comes to seed
Everything.
technology, that
Uh-huh.
too. But especially the seed technology, which is part of the reason that they had come over and purchased Syngenta. For reference, China produces about just under 18 million metric ton of beans a year. The U.S. Produces around, well, it doesn't make sense to me. The U.S. produces about 4 billion bushel. And so the China, I'd have to look at that math there. But when you're looking at, oh, sorry, I was looking at oil, that would be why. When you look at soybean supplies, China production is about 17.5 million metric ton. The U.S. is 113
Oh,
million
yeah,
metric
dwarfed.
ton. So that
Okay.
just kind of puts it into perspective for you that China is definitely an importer. They're estimated to import about 100 million metric ton this year. Some folks are saying that number is too low. Some are pointing at soybean stocks at ports levels and saying that number, could be right. It could be a touch too high. And so we're just kind of waiting to see what they do as we move ahead and if the USDA needs to increase carry out or not. Because basically
okay.
right now, carry out is a record low. It's the lowest it's been in 7 years projected right now.
Okay, well, normally there's some type of balance between what we do as grain producers and what Brazil does. And I'm wondering if Brazil's production numbers or their carryover is also showing, bullish type of market conditions. Maybe COVID affected farming down there more than here. What's your take on Brazil being an offset to this recent run in beans and
Yeah,
the other
Brazil's
grains?
really been kind of part of what the run has been because they're currently in their production season down there. Basically, we'll start to see some early harvest of soybeans late next month into February and March, and they have been exceptionally dry for Brazil. So this is what gets really confusing when you're starting to come in as an outside observer and look at what's taking place from a Brazilian production standpoint. Simply because Brazil tends to, they're a tropical climate. They tend to receive a significant amount of rain well above what it takes to really produce a good soybean crop. And that's part of the reason why they're able to consistently produce a good crop down there is because they do get that rainfall that we may miss in some locations here in the US, in the Corn Belt in particular. And so they are well below normal. If you take a look at monthly rainfall amounts and things of that nature, their rainfall has been exceptionally below normal coming into this year. And then as they've started the growing season, they've run into some issues with La Nina and seen some continued below normal precipitation fall. Now, the question going forward is, it's early enough in a lot of areas of Brazil to really kind of correct, stabilize, and even support production outlook because they have that amount of time to really kind of work their way towards the end of the year. And so the $1 million question is the weather. Does La Nina start to break down? Do we start to see some heavier rainfall? Does it help to save that later planted crop and then provide a good amount of moisture for their safrinha crop or their second crop of corn that gets planted after their soybean harvest and is responsible for about 75% of their overall corn production? We're really watching to see what that weather is. So Brazil is definitely influencing what's taking place in the market structure right now, just simply because our carryout outlook in soybeans and to some extent in corn is relatively tight comparatively speaking. And therefore we can't really afford, given the global supply and demand situation, we can't necessarily afford to have a major production issue in South America at this point. And so we're going to be watching and holding our breath.
Okay, well, here's a pretty interesting inverse correlation. So here's a look at the beans, Angie.
Yep.
And this is a weekly chart. And here's a look of the dollar.
Mm-hmm. Yep.
So what percentage, I know we're talking supply demand, but what percentage of it could be based upon dollar weakness at nominal gains based on dollar weakness? Could that be part of it?
For sure. I think there is a level of, like the last the last commentator was saying about the buy gold and wait, right? And that sort of commodities, the hedge when it comes to losing the dollar, losing the value in the dollar has always been kind of commodity ownership, wanting to have something, that hurts when you drop it on your toe. That was always the conversation and the idea behind, that inflation trade and all of these things that we've been hearing about, quite actively over the last couple months. And so I do think there's a factor in that. I think that the weakness in the dollar is helping keep our exports competitive. That's across the board, wheat, corn, and soybeans. As it does, a weaker dollar, obviously helps your ability to export. And I think there's a hedge on the idea that we see continued dollar weakness. I mean, there's some folks out there, they're talking the upper 70s, right, as a target in the dollar. And obviously that would encourage a level of inflation and help support our level of potential exports and really kind of keep this market on its toes. So you've had a perfect storm, right, of information that really would have been difficult to foresee when we started the summer, and we're still, kind of in the throes of COVID, and the USDA had a 3 billion bushel corn carryout number, and all of these things. Like I will be doing this for another 30 years probably, and we'll be talking about 2020 as the year that, we went from 0 to 60 exceptionally quickly when it came to markets. If you just look back, you'll see, multi-year lows all of a sudden transformed into multi-year highs here. And it felt like overnight.
Yeah, I can't remember a period like this
No.
in market history. So, I mean, the last pandemic, I really wasn't trading. I was still in grammar school. And you know what, Auntie, I did drop an ear of corn on my, and it didn't hurt. But
it didn't?
I have corns on my feet now. But anyway, so getting back to the grains, you have a preference as far as are there any pairing trades like long beans, short corn, or intermarket, long beans, short wheat, anything like that?
Yeah, I would say if you really, and it's always scary to look at any, right? Because a lot of times an intercommodity spread is not necessarily, I mean, you can make anything a spread if you try hard enough, right? But if you look at corn and wheat right now, the typical premium in wheat versus corn ends up being should be around $1.35. Right now that's sitting about $1.70 after the big run up in wheat here that we saw, $1.78, $1.79. Looking at March versus March right now would put you at minus 426. That's gonna put you at about $1.83. And so, I would say that wheat in comparison to corn could be a good trade. So sell wheat, buy corn, if you were really looking at trying to trade an intercommodity. It's not necessarily my cup of tea, because
it's probably simpler just to buy support in all of them.
Right, that's probably the best. And everyone kind of says buy pullbacks. I mean, the reality is, though, with wheat, this Russian export tax story is what's hit wheat here recently. If you look at wheat just in the weekly chart, we're currently 40 cents above the low last week that we hit. I think we traded down to 668, I believe. And so, we really saw this huge rally in wheat on a Russian export tax story. The last time we traded higher on the Russian export tax story,
70s.
Yeah. Well, in 14 and 15, they did come out. They had a much larger crop. They had exported a significantly amount less prior to this story coming out. And it really ended up being bearish wheat overall, because what tends to happen is it doesn't fix your domestic food inflation problems. You'd be further ahead just to write a check to your folks struggling with, food purchases, and continue to allow for relatively free market wheat exports, just simply because the farmer tends to shut off the sales once they realize that, okay, if I just hold out until June, when the next crop comes along, I can export this wheat without any sort of issue. And, especially if you don't know what your new crop's going to look like, it makes sense to hold it for a hedge. So it tends to backfire. And that's really, if I were to pick one thing that I'm kind of like, okay, there isn't really any additional stories. And once we trade through this Russian wheat export tax story, after that, there really isn't anything. The Russian crop is huge. The rest of the wheat crop is it's sleeping now, other than in the southern hemisphere, where they're harvesting wheat, every month basically. There's a wheat harvest across the globe.
Okay.
The next thing we're gonna be looking at is
Planting.
planted acres. Yeah.
Yeah.
Most of the crop was planted in the fall, the winter wheat area was, and
Yeah.
the price was above 6 for new crop wheat. And so that really encouraged a significant increase in planted acres. And I would imagine that the January report is going to show that. And so I would say the market that has the most bearish information stacked up against it is wheat, although the dollar is going to influence that. Like you were talking, wheat tends to be a lot more closely aligned to what the dollar is doing than the other two crops. Everything else is going to be dependent South America and whether or not we continue to see this huge aggressive export pace, around the world.
Okay, so when we look at these markets, Angie, and planting coming up, you're saying there's a La Nina.
Mhm.
El Nino is more of a worry for the U.S. grain
Yes.
belt, right, than
Yes. Yep.
La Nina.
Yeah.
So there won't be as much of a drought watch out over the U.S. with that happening.
If we can see a correction to what we have right now, we're definitely going to be watching the drought conditions, as we've seen the western drought that has caused so much
Yeah.
issue here over the last year is starting to spread east. Some old timers will tell you it's the southeast drought you have to worry about, not the west to east drought. But I think everyone has an old timer sort of tale that they can use for anything in agriculture. So we'll definitely be watching it. Dry conditions tend to encourage rapid planting pace and tend to give us more corn than soybeans, just because once the planters are able to go, they're going to go. So it's not necessarily so much what happens as we work our way into planting, but obviously the rainfall that happens after the fact, especially if our subsoil moisture is depleted. So we'll continue to watch that. La Nina can influence the southern plains, which we've seen an exceptionally dry fall. Which is part of why you've seen wheat rally there as well, is because the southern plains wheat areas has been under somewhat stressful conditions, and so we'll continue to watch the world, or Mother Nature is not done with us yet, I don't think, and so that'll be something that we definitely will be paying attention to, as we work our way through the next 5-6 months.
Anything to look for out of a new administration when it takes power, and with the new USDA secretary?
Yeah, it'll be interesting to see. One of the things that we kind of enjoyed a little bit more with the former USDA was a bit more inconsistency with how they made determinations across the board when it came to crop outlooks and things of that nature. So we'll be maybe hoping to return to a semblance of normalcy with that. Over the last 10 months here, we've had 4 different unprecedented USDA report adjustments, which
Wow.
that may have nothing to do with the administration. You know what I mean? Like that,
Yeah.
that it may have absolutely zero to do with that. But it seems odd to have, like 4 in a row that were major adjustments that no one had seen prior. And really had no reasoning. There was no explanation behind the adjustments that were made. So we'll be wondering if we kind of settle back into a semblance of normalcy on that side. Obviously, we'll be watching what the Chinese relationship, will look like going forward. That's going to be big. And then whether or not the SREs, those small refinery exemptions that were there was a huge uptick in those throughout this past administration here, which basically meant that the small refineries, if any refinery could kind of prove that they were unjustly feeling pressure due to the ethanol blending mandate or the need to buy RINs, they could kind of petition to the EPA, and the EPA would let them out of their obligation, under the renewable fuels standards. So there'll be a question as to what that looks like going forward. They were already deemed illegal in an appeals court, but nothing has been done, by the administration to kind of remedy that. So we'll be watching to see what that means for ethanol. Ethanol obviously is a huge influence on corn.
Right.
And then obviously, like I said, the China thing is going to be probably the biggest.
Do you have a Jensen or one of those? I think they're called digesters. Chicken farmers have them, and
Mhm.
the problem is that the waste creates methane,
Oh,
which right?
yeah, yeah,
Yeah.
yeah.
So I
So
mean,
there's,
in fact, I have a friend that's transitioned into that business,
mhm,
and do you think that the new administration, since they talk about really wanting to go green, will
yeah.
extend tax credits for farmers to get this type of thing, because it would generate enough power to be able to sell to
Yes.
utility companies.
Yeah, we actually, one of the chicken feeders that I sell corn into up north of here went through this entire process over a decade ago to get that set up, and they were able to sell electricity back into the grid,
Right.
and still power all of the places, their feed mills and everything that they were doing. So yeah, I mean,
Yeah, it's expensive, but comes
I
back
think
to
it's
them.
worth it long term. Yeah.
Yeah.
And so that's one of the biggest things I'm kind of looking forward to with the new administration. I worry that obviously there's some unintended consequences that can tend to come from some of the conservation push. We're seeing that in Canada right now when it comes to some of these carbon taxes and things of that nature. So there is
Yeah.
that underlying concern that comes with, perhaps an increase in regulation that is not is a one size fit all in an industry that's not one size fit all. So there is that concern, but I'm super excited to see what we can come up with when it comes to abilities to produce renewable fuel. I'm a huge wind power person. I like it. I get there's a lot of people that'll say, from a cost to efficiency standpoint and things of that nature, but I just like working to harness natural fuel producers in a way that really kind of benefits everyone. So I am excited to see what that would bring about. It's obviously a good thing. There's a lot of methane that is produced via any type of animal production.
Right.
So it would be really cool to see that captured and
Yeah.
all of those things that we could see. And I would love to see a return in investment when it comes to that. We saw that big with the W administration, and then it was continued with Obama, and so it would be nice to return to a level of that, without
Okay.
high fuel prices being the only reason why.
Well, the whole agricultural industry really had a tough year or so between trade
Mhm.
wars,
Yeah.
pandemics, etc. I'm assuming with this recent rally in grain prices that there must be some healing taking
Yes.
place in the farm sector now, right?
Yeah, there's definitely more confidence in what we're seeing as we move ahead. It was quite dire in March and April. Or, the biggest concern is not having ethanol production anymore, and in addition to that, losing livestock producers because of the backup that we saw in
Are
processing capacity there too. So
So people are fleeing New York and the major metropolitan areas. Are they buying 100-acre estates in Iowa and Indiana and
that's the
Illinois, Angie?
conversation. Yeah, I mean that's the talk, right? Is that you're going to see
Are you
folks
seeing it
leaving.
at
I mean,
all?
I feel like to a certain extent, I feel like we are. My husband, my family, we live just outside of the Lansing area, and I feel like we are seeing a massive increase in more rural
Yeah.
subdivisions, so to speak. So you're 10
Uh,
minutes from all of the things, but you're still
yeah.
in a neighborhood, because living on your own, living rural is all fun and games until you look around and there's no one to help if you need it. So we're seeing a definite change there. I think if you looked out west, you would see it. I think population centers are starting to change.
Yeah.
Always kind of a certain level of careful what you wish for. A lot of folks are like,
Yeah.
come to our small town, and it's like, yes, it's
Yeah.
great, but people,
Yeah.
things change, which is awesome too. But yeah, we're definitely seeing that. Hopefully that'll help kind of continue to increase the investments that we're seeing in rural broadband and things of that
Yeah.
nature.
The only thing permanent is change, Angie. And
Exactly.
being the goddess of grains, I'm happy that your kingdom and universe is going through a period of perhaps some very good prosperity over the coming years with higher prices and the ability to sell into market. So appreciate you being here, Angie. Merry
Yes.
Christmas to
Merry
you and
Christmas
your
to you.
family. Happy
Yeah.
New Year. And I appreciate you being here and, as you say, giving us all those dirty fundamentals and
Right.
charts back them up by Trading Warrior Sisters. Thank you for your time today.
Thank you. Have a good one, and we will see you next year, right?
Okay, Angie. Yes, Angie Setzer. Find her on Twitter at Goddess of Grain. Do you have a website address you want to give out, Angie?
You can check out Citizens Elevator LLC or the businessendoffarming.com.
Okay, that's a wrap. All right, everyone. Don't just count your bushels, count your blessings, and we'll see everyone tomorrow. Good hunting the rest of the day. You're very welcome. You're very welcome. This is a sector that I urge people to put on their watch list and look for opportunities. And that's a wrap. You're welcome, Tom. See everyone tomorrow for Turnaround Tuesday. Adios.